And the reason why I want to show you this is because it illustrates that the size of this move we're going into now is much larger. Sure, today Bitcoin is about a $2 trillion US dollar market cap. Hundreds of billions of dollars have gone into it, and now we're about to see trillions of dollars come into it. The size and speed of the move is much bigger, so you haven't missed anything. It's just getting started. Now, phase 2 is what we call the frenzy phase, and this is where we're at today. All right, this is going to be unlike anything we've ever seen, and no matter how bullish you are, you're not bullish enough. And at this point, the world has decided that we should no longer use the denominator of fiat currency. And at this point, Bitcoin has reached its full and final stage, which is stage 5, and has become the global unit of account. At this point, you no longer measure your wealth in fiat, you measure your wealth in Bitcoin. And at this point, 1 Bitcoin equals 1 Bitcoin.
The revolution of Bitcoin is gaining unstoppable momentum, and the financial world is about to undergo a seismic transformation. That's the most recent revelation from well-known investor, market strategist, and businessman Mark Moss. Moss believes that Bitcoin is positioned to become the cornerstone of a new monetary order at a pivotal moment in the history of the global financial system. Institutional interest is increasing more than ever before as fiat currencies lose their credibility. Moss cautions that the next adoption wave is occurring more quickly than anyone anticipated and has the potential to completely alter financial institutions and economies. Stick around until the end of this video, as Mark Moss reveals astounding forecasts for Bitcoin's future and explains why decentralized assets may rule the next 10 years. Make sure to hit the subscribe button and turn on notifications to stay updated with our expert analysis. Now, let's dive into Mark Moss's visionary outlook on Bitcoin's unstoppable rise.
So in this first phase, 2010 to 2020, Bitcoin is in this collectible phase. Now, we can see some illustrations of this. We had famous Laszlo spending 10,000 Bitcoin on a pizza back in 2010. So this Bitcoin, this collectible, what is it? Let's see what we can do with it. Would anybody trade me one collectible for another? How about some pizzas? It was a groundbreaking experiment. Of course, it was a very expensive pizza looking back in it. But remember, each one of these cycles is held back by scaling. And so in this scaling, then we had this experimentation into this altcoin boom. Well, let's make ones that are faster and cheaper and more private. And now this really culminated into 2017 with the block size wars. There's a book broken down on this, but this is one piece that's always there present. It was a necessary step. Now, I believe that this collectible phase really headed up in 2020, and we can see where this really took a blow off top with NFTs, the ultimate collectible. The NFT market exploded in 2020, growing 300%, over $250 million in transactions. 97% of wallets were using them, but by 2021, it got to 41 billion, as you can see. By 2022, it completely fell off a cliff. Trading volume dropped 97%, and today, reports are that 99% of NFT projects are dead. So the collectible phase was a necessary step, but it's not the future. Now we can see that going into phase 2, which is then the store of value phase, the seeds were already planted early on. We saw early back in 2013, venture capital fund Andreessen Horowitz already started to invest into Bitcoin startups, trying to help build that next stage. We saw 2017, CBOE and CME started doing futures. That was really the first time we started seeing institutional adoption coming in for the store value. 2018, Fidelity started planting the seeds to get other institutions in as well. And so that's where it phased. Now, looking at some of the prices, we can see in 2010, these on the left are store of value assets. Jeff Booth was up here earlier showing store of value assets. So these are assets that we store our wealth in, obviously. Real estate, gold, collectibles, equities, real estate. Now, if we go back, gold was only a $5 trillion asset in 2010. By 2020, it was $11.5 trillion. Real estate was about $180 trillion. By 2020, it was $326 trillion, growing at a 6% ARR. Now, during this time, all store of value assets went up by about 8% ARR. Bitcoin went up 4,426%. It was an amazing time to be in Bitcoin. During that time, we can see that Bitcoin went from about 30 cents per Bitcoin to $28,000. Again, an ARR of 4,426%. Now, during this time, Bitcoin, by 2020, took about 0% of store of value assets. Not even a blip, not even a drop in the bucket. Okay, now let's get into some of this future, okay? Now phase 2 is what we call the frenzy phase, and this is where we're at today, all right? This is gonna be unlike anything we've ever seen, and no matter how bullish you are, you're not bullish enough. Now this is where Bitcoin evolves from the collectible phase and cements itself as the premier store of value. All right, so what we can see is we're in this institutional frenzy phase, and we're starting to see institutional adoption come in, and now, of course, here we are talking about sovereign adoption that both happen in this phase. Now, this maps, again, in the evolution of money, and will complete the store of value phase. We'll get to the medium exchange phase next. But this is where we're at today. Now, again, not all collectibles make it to this next level, but Bitcoin will. Now, I do want to point out real quick, for everybody who thinks that they're too late, that maybe they missed it, using an S-curve dynamic is how we'll look at technology adoption. Now, one way we can look at this S-curve is that the time it takes to go from 0 to 10% is the time it takes to go from 10 to 90%. And the reason why I want to show you this is because it illustrates that the size of this move we're going into now is much larger. Sure, today Bitcoin is about a $2 trillion US dollar market cap. Hundreds of billions of dollars have gone into it, and now we're about to see trillions of dollars come into it. The size and speed of the move is much bigger, so you haven't missed anything. It's just getting started. Now, at this point, we can see this total store of value assets. You can see Bitcoin down here on the bottom right, sitting today at about 2 trillion, and it's still just a little blip on the road right here. A drop in the bucket. Now, how much bigger is it going to get? Well, I got a bunch more charts to show you, so don't worry. But really, right now, this is the frenzy. This is the institutional phase. We can see that right now today, about 60 companies have already started adopting Bitcoin on their balance sheet, and this is happening every day. We see new announcements of this happening. This chart, the big chart here, shows the real institutional adoption. We have MicroStrategy adding about $1 billion a week. I just saw before I went on stage, Riot just added about $500 million of debt to buy Bitcoin. We have Marathon doing $1 billion. And right now, this is showing us that about 13.5% of all Bitcoin is now being held by institutions. Of course it is. Bitcoin was always coming for everybody.
The International Monetary Fund has approved a $1.4 billion installment as part of a $3.5 billion support package for El Salvador's economy. The country's Bitcoin laws will change as a result of this agreement, allowing private companies to use Bitcoin and reducing the role of the public sector. The Salvadoran government is solid in its support of Bitcoin as legal tender in spite of these developments. El Salvador's National Bitcoin Office head, Stacey Herbert, reaffirmed this pledge by outlining plans to increase the nation's Bitcoin holdings. Actually, the government now has 5,900 Bitcoins in total after adding another one to its collection recently. What's your take on this development? We'd love to know your thoughts in the comments below. Now, let's return to Mark Moss as he shares more game-changing insights.
Now we're getting into what's called the deployment phase. This is 2030 to 2040. Now this is where things start getting really exciting, but warning, I have to leave some historical numbers behind, and I got to start using my crystal ball. My crystal ball is a little fuzzy, so forgive me. We may have to kind of fudge through this a little bit. All right, this is the adoption and the synergy phase. Now, this is where things start getting really exciting. We start to see adoption. Now, some interesting things about adoption is a lot of Bitcoin critics want to tell you that Bitcoin's already failed. It hasn't achieved any adoption. Why is it in a medium of exchange, they tell you? Why can't I just go to the store anywhere and spend my Bitcoin, they ask? Well, I'll tell you why. Because history gives us a framework and tells us that it doesn't come until the next phase. And anyone who's expecting that right now doesn't understand technological revolutions. They don't understand monetary history. They don't understand that there's this evolutionary and emergent process that we have to go through. And what they also fail to understand is that even though Satoshi called an electronic cash system, they say it's failed because it's only a store of value, they failed to understand monetary history and something specifically called Gresham's Law. Anybody ever heard of Gresham's Law? If you read Bitcoin Standard, you probably do. Gresham's Law says that bad money drives out good. Bad money drives out good. So what that means is we're always going to want to use the bad money, not the good money. As long as I can use fiat currency to buy my lunch, buy my drink at the bar, I'm going to use the fiat currency and I'm going to save the good money, which is the Bitcoin. Why would I spend the good money? Now, we have a perfect way to understand this. In the United States, of course, we have coins, and we have quarters and dimes. A quarter's a quarter of a dollar. Now, up till 1965, these were made out of pure silver. Starting in 1965, they made them with junk metal. That's nickel and copper. You cannot find in America a pre-65 quarter or dime in circulation. They're all gone. They were driven out. If you just so happened to get some change and you found a pre-65 quarter and dime, you would not spend it. Why? Because a quarter now is worth $4, but you'd only get 25 cents for it. The bad money, the worthless quarters and dimes, have driven out the good ones. You wouldn't spend those. And so it's a perfect illustration. Now, why would we then use Bitcoin as a medium of exchange? Well, we would only use Bitcoin as a medium of exchange if it could do something that the existing money, the fiat system, could not be used for. Now, we can use this as another example. Gold collectors buy bags of what's called junk silver. They buy bags of these pre-65 quarters and dimes. Why do they buy them instead of bars? Because they believe that at some point the fiat system crashes and they're going to need the quarters and dimes in small denominations to barter with. They believe in a world where the other money, the fiat money, no longer works, and they would need that money, which illustrates the point. So then we ask ourselves, well, what would we need Bitcoin for that fiat would be no good for? Certainly not to buy the drink at the bar. Works fine for that. My plane ticket, make my house payment. So what kinds of things? Well, we look at the unique utility abilities of what Bitcoin can do. It's fast and cheap, it's borderless, it's permissionless, it's censorship resistant, it's immutable. So if we need to do those types of things, then we might want to use Bitcoin. And at this point, the world has decided that we should no longer use the denominator of fiat currency. And at this point, Bitcoin has reached its full and final stage, which is stage 5, and has become the global unit of account. At this point, you no longer measure your wealth in fiat, you measure your wealth in Bitcoin. And at this point, 1 Bitcoin equals 1 Bitcoin.
Mark Moss explores the revolutionary deployment phase, which is when Bitcoin adoption will really take off and last from 2030 to 2040. He clarifies that detractors who argue that Bitcoin has failed because of its restricted application as a medium of trade are misinterpreting the course of monetary history and technology revolutions. According to Moss, adoption occurs in phases, and the crucial stage of integration and synergy is only now beginning. He explains why individuals save valuable assets like Bitcoin rather than spending them by using Gresham's law, which states that bad money drives out good money. He emphasizes how individuals inherently hoard good money due to its long-term value, drawing comparisons to the pre-1965 decline of silver coins in the US. According to Moss, Bitcoin won't be an acceptable means of exchange until it offers features like immutability, censorship resistance, and borderless transactions that fiat money cannot. Bitcoin has the potential to overtake fiat currencies and real estate as the primary denominator of wealth in the world as it extracts value from these assets. In the last phase of this development, according to Moss, Bitcoin will replace fiat money as the world's unit of account. He predicts that the value of Bitcoin might reach an incredible gains based on historical monetary cycles and estimations of world assets. Moss emphasizes that this is a pattern that has recurred with every significant technical advancement over the previous 3 centuries. Mark Moss makes a strong call to action in his closing remarks. He tells the audience that Bitcoin is at the center of a revolution and not just a new technology. People have a unique chance to influence how money and finance are developed in the future because to this decentralized movement. We appreciate your time and hope to see you in the next video. Until next time, happy investing.